Hey guys, Don Durrett, Gold Stock Data. I've given you two long videos, one on producers that I own and the other one is on developers that I own. And I was going to do exploration, but I decided instead to do optionality. I haven't done an optionality update in a while. You can see down here, I started doing these optionality lists back in over a year ago, August of 2023. It's amazing that these optionality plays haven't broken out. Even some stocks have done well um, this year, but on the whole, a lot of these optionality plays haven't. They're still, I mean, I was looking at, you know, the upside, how much, are any of these starting to go down? Are you late to the game, if you will? And we really haven't seen any. You'll see when we go over these. There's about 60 names, so it's going to take us at least an hour to get through them. I was wondering how to present them. I decided to break them into chunks, if you will. So I'm going to do exploration first. I'm going to do silver explorers first. So the first category, the first column here is category. PG is project generator, and then the type is silver, and then the GSD rating. I have only two of them that are three, and the reason why is because it's hard to predict an exploration play, what they're going to get for it, get back for it when they sell it. Uh, the columns, I can go over the columns really quickly. This is the current market cap today. So 24 million for silver 47 exploration. This is their current ounces in millions. So it's 170 million. This is my estimated future. So I have it 200 million. And I actually think that's really conservative for them. And then this is a calculated field. So it takes is the current fully diluted market cap per ounce. And so it's E16, which is this one divided by G. So it's estimated future. So it's the current fully diluted market cap versus the future ounces. So it's currently trading at 12 cents. So anything below 50 cents, I think is very cheap. And then this is my estimated future market cap per ounce, how much they're going to sell for. So I'm using $2. So using $2 without any dilution, they would sell 200 million times two would be 400 million. And then these are both calculated fields. With 25% dilution, it would be 11 bagger or 11, almost 12 bagger, and then almost an 8 bagger with 50% dilution. So these are highlighted showing the current, um, what it's currently valued in the ground at, and at a 25% dilution based on this. I'm sorting, this is the column that I'm sorting by the expected return. And it's just, it's just a wild guess. Are they really going to get $2 an ounce? Maybe they sell it. Currently, I think 50 cents is cheap. So a dollar, I think anybody, these companies, if they're not patient enough to wait for a dollar, that's just really, they're going to be giving their project away. $2, in my way that I look at it, I think $2 is kind of conservative. But will they, it depends how patient they are. So my optionality list really is based on one thing. It's companies that have gold or silver in the ground that are currently valued very cheaply. So here's the current valuations under 50 cents an ounce with the expectation that they're project generators, so they're going to sell these projects, that they're going to be patient enough to sell them at $2 an ounce. And if they do that at these dilution levels, these are our expected returns. I so I think I've explained. You should understand the chart now, and you should understand what these data points mean. The notes, you can take screenshots. I'm not going to read these. These are my quickie notes, if you will, for each one. Uh, okay, so I'm going to go down these lists. So the first one, Silver 47. This is a new company that just picked up the Red Mountain project in Alaska. They have a target of 500 to 900 million ounces, which I think is a bit aggressive. I'm going to put 900 million um, ounces at silver equivalent. So they have a very big target. If they just get to 200, this company looks pretty good as an optionality play. And most people haven't heard of it because again, it just started trading this year, fairly recently. Um, they got it from a company in Australia. I couldn't believe they give it away from. They actually paid less than $10 million for this project, which is just ridiculously cheap. I think it was even less than that. I think it was like 7 million. So they basically just stole this project. It was kind of ridiculous. Now they're currently only valued at 24 million. The reason they're valued at 24 million is because they didn't pay anything for this project. It's going to be expensive for them to drill this. So I think that we're really looking at the 50% dilution, and it's possible we might even get 100% dilution by the time they sell this thing. So it's more of a 500%. Um, some of these, I'm using 25% as kind of a mean, but some of these companies will not, especially exploration, they probably won't be able to stand at 25%. That's probably a very aggressive. Moranen's another one. So they're in, I think it's New Zealand. So they have 200 million ounces. Uh, it's polymetallic and it's low grade, 100 million ounces of silver at 100 grams, which isn't bad. And then another 100 million, the polymetallic. But and there's another there also they're probably going to have trouble with 25% dilution. We can expect them to go over. I'm using this dilution for explorers and developers. So for the exploration companies, they're more likely to do the 50% or worse. Developers are more likely to hit the 25. Argent, this is a very low grade project in Australia. It's only like 1 gram. They have 143 million ounces silver equivalent at 70 grams. So the silver is only about 30. So it's really low grade. So this is one of those ones that I don't own Argent because of that. I just think the grade's a little bit too low. But if you want to be aggressive, it's pretty interesting. So I'm only valuing them at 65 million, but they have 100 at the silver because they're going to need the offsets um, to be profitable. So that's why I'm valuing at 65. Southern Silver, I'm only valuing at 300. So they have 350, but I'm valuing at 300. But even at 300 million ounces, they're only priced at 19 cents. So I like Southern Silver quite a bit. I just hope that they get at least $2 an ounce. El Oro, this is mostly a base metals project in Bolivia. It's mainly a tin. They have a lot of tin, but tin is very valuable and very desired. But they have a billion around. They think they have around a billion ounces of silver equivalent. And I don't know why they call it silver equivalent when it's only a third of the project is silver, 300 million ounces of silver at 15 grams. And then your recovery is probably going to be maybe 50%. So it's mostly a tin mine. Um, but it's definitely interesting. We're gonna have to wait and see how much revenue they get from the silver. They might give the silver away in a stream to pay for the capex, or whoever buys it is not going to be really interested. But we're not. This isn't a development project. We really just want them to sell this thing for $2 an ounce. Kootenay, by the way, El Oro has come down in value. So has Southern Silver. Both of these guys at 56 million for Southern Silver and 55 for El Oro. If you look at their their chart, these guys have both gotten cheaper, which is kind of crazy. Maybe we had stock selling loss, tax loss selling this month, but both of these guys look pretty darn interesting at these valuations. Kootenay is another one that kind of cheap at 68 million. So they have 350 million, but it's three projects. The one that I like is Columba that's getting bigger, but you're paying 27 cents in the ground. And yeah, I like Kootenay. I just think you're getting good value there. Equity Metals, they had a good drill hole recently. Um, I have them increasing. This is silver equivalent at 85 million ounces. I have them increasing to 100 million, which gives them, almost four bagger if they only do 25% dilution. A lot of people like equity metals. I haven't been a big fan of it, but it's definitely interesting. Okay, now we're going to do exploration for gold. Okay, so and I'm sorting again. So the first one on here is Triumph Gold. It's um, they haven't made a lot of progress. It's kind of been spinning their wheels, but it's a big property. It could get bigger. It's 1.5 million ounces, trading at $6 in the ground. Anything below $20 for gold in the ground is pretty darn cheap, and they're trading at six. Anything below 10 is really cheap. They're trading at six. Will they get 100? So I'm using $100, and then without dilution, it should be worth 150 million. They're trading currently at nine. So it's not a slam dunk. It has a high capex. They did put a PEA on it and had a capex of 400 million, which is going to turn people off. But gold goes. When does Triumph? When does it take off? If you're buying 1.5 million ounces in the ground for $6 and they don't dilute us into the ground, at a certain point, Triumph is probably going to rip higher. Will they sell it for $100 an ounce? Maybe not, maybe, but if they sell it for half that, it's probably a three bagger, maybe four bagger, maybe five. So I think Triumph's interesting. Tudor Gold, I'm a fan of this. I think it's still growing in size. So we have it at 20 million ounces. If they sell for 100, if they're patient enough, you're looking at, at a 10 bagger, if they only dilute 25%, I I don't, they'll probably dilute more than that, but not a lot more. But I think it definitely, I like Tudor. I think it does have five bagger potential. One thing I was worried about Tudor was refractory ore, but I think the refractory ore, about a third of the project is not refractory. So they can actually start, they can build this, whoever buys this can build the first mine, phase one, with non-refractory, and then use the free cash flow to pay for the add-on to to process the refractory ore. So I don't think refractory ore is a problem here. And you're paying $6 an ounce in the ground for a big mine that's going to get built at a certain point. So I like Tudor Maple. Um, so the problem with Maple is Agnico Eagle has a 50% back-in option. And I expect, and if this thing grows, so it's currently at 3 million ounces. If they get this thing up to 5 million, I think Agnico, the first thing they're going to do their 50% back-in. And then once they own 50%, I think they're just going to buy the whole thing out. And so that's not good. So that means if they're going to buy the whole thing out, they're not going to pay $150 an ounce. They're more likely to pay. The reason why I have it at 150, I'm not sure. I I think probably 100 probably makes more sense. Um, it's probably because it doesn't have a chance to get taken out. I think yeah, I haven't looked at these in a while. Now that I look at this, I'm thinking more, it's probably more 100 and Landor 100. I usually, um, Roscan, I'm gonna take it down. Oh my, 100. Collective's probably 150. Labros, I guess I'll leave it at 150. These are um, the ones that are really highly desired are going to get more. So I think those are the only two that are probably going to get more. I don't think they have to be highly, at this point, I'm going to be conservative. The ones I really expect to go all the way to 150, I'm going to leave those. Okay, Maple. So again, I'm not a big fan of it because I just think Agnico is going to buy it out. I don't think they're going to pay 100. So it's currently at 19. So maybe they pay 50, 60. If that's all they're gonna have to do. Landor, I'm not a big fan of it. 1.5 million ounces. Let's go take a look at Landor. I was trying to see where in Canada it is. Scroll down. It's in Ontario, so it's in a good location. So you're paying $16 million for a 1 million ounce deposit in Ontario at 1 gram. The capex was only 85 million to produce 70,000 ounces. That's really good. Plus, they have an 18-mile strike length. I take it back. I do like that valuation. Paying $10 in the ground for easy double or triple. Yeah, Landor definitely looks interesting. I don't own it. Grand Portage is another one that I don't own, but I like. It's in Alaska. It's high grade, 9 grams per ton. Paying $18 an ounce for high grade gold in Canada. And it's big, 2 million ounces. I don't own it, but it's definitely interesting. Seabridge, problem with Seabridge is we just don't know how to value this thing. So I'm valuing it 135 million ounces. It's at $8 an ounce in the ground. I know a lot of people like this a lot. I don't own it because I just don't know how to value it. Teton, this is the same thing as Tudor. Tudor owns 60%. Um, I can't think of the name of the project. And Teton owns 20. So you're paying, they get 6 million ounces. You're paying $8. But the thing that's nice about Teton is you get additional projects that they're drilling. So I think Teuton's interesting. Getchell, I think, is interesting. 2 million ounces in Nevada, and you're paying $8 in the ground. It's silly cheap, basically. They're not getting any value. At a certain point, this thing's going to 50. When it goes to 50, that's at least a three bagger, and then it could go from there. But at a certain point, these things are going to get revalued higher. I mean, it's just 2.3 million ounces in Nevada. This thing's going to get built. Someone's going to buy this thing. Freegold Ventures, you guys probably know I'm a big fan of this. The reason why is, I mean, you're paying $10 an ounce in the ground. And the reason why I like it is because private investors basically have more than 50% of the shares and they're not selling. So those private investors have the company basically in a stranglehold. There's nothing that Free Gold can do until those until those private investors basically say, "Yes, I'll sell my shares." So the first one's Eric Sprott, he owns 29%. And he's expanded it to 29 because he knows how valuable it is. He's paying $10 an ounce in the ground and he knows he's not going to sell it for less than 100. I don't think he'll sell for less than 100. So we're going to get our 100. So that means about a seven bagger if they don't dilute more than 25%. They do a little bit more, maybe we only get a five bagger. But at a certain point, I think companies are going to try to make bids for it. The first bid's probably going to be around $40, $50. As soon as that happens and they say no, this thing's going to rip higher because then everybody's going to realize, wow, they turned down an offer at $40. It must be worth that much. And this thing will get revalued up. And then we'll just keep the bidding wars going. I think there'll be at least two bidders for this. And of course, is the Fort Knox mine that Kinross owns is right next door, and Kinross, it's a perfect fit for Kinross. Roscan, it's in West Africa, so that adds a lot of risk. I don't know if this thing's going to grow. I only have it at 1.5 million, trading at 16. It's not really that juicy, if you will. Oh my was really juicy, and then it went up a little bit in value at 67. So I'm valuing it at 4 million ounces at $16. They might, this thing could easily go to five. If we go to five, it goes to $13 an ounce. I think this thing could go to five, but I'm just going to value it at four. Um, it's in Guyana. Someone's going to buy this thing. I don't know if they're going to pay 100. If they do, we're going to get. and maybe it's not a great great return. These ones down here at the bottom are kind of iffy, if you will. OMI was great when it was like trading at like 20 million. Now it's at 67, so it's kind of jumped a little bit. Vista Gold, they're doing an updated feasibility study. They the current one has $1 billion capex. They want to lower it down to about 400 million. So it's going to be a two-phase project. They just want to get some interest. They want to show people that, okay, you can build this thing for 400 million and it's profitable. But you're paying $12 an ounce. The problem with Vista is we just don't know if they're going to get $100. But I think it's a slam dunk two bag, right? There's a possibility they could JV it and they don't sell this thing. There's a lot of unknowns there. Rock Haven, 1.5 million, and this is in the Yukon. Um, they have a lot of insiders, 50%. Rock Haven is interesting um, because they're sitting on 1.5 million ounces. I mean, if the Yukon takes off, I mean, that's a project people are going to want to buy. Collective Mining, I really like this one. It's a little pricey. I have currently I on Collective is in Colombia, and it's a thing of beauty. I mean, it's high grade, it's massive pit. Well, maybe I think they underground now. I think it's like they might be able to mine this thing underground, but I think they want to. But the Apollo mine is it's about five. I guess we haven't gotten a resource yet. That's one thing I was looking to see if we had an initial maiden resource. It doesn't look like we have yet, but you can see they think it's about 500 million tons. At 1 gram, that's 16 million ounces. It's a big pit, 600 by 1,000 meters, and it's really deep too. So the drill holes have been outstanding. Um, so they have a lot of insiders, 40%. So they're not going to give this thing away. So I have it at 15. It's probably going to go to 20. So if we take this and put it to 20, you're paying 16 an ounce. Now you're paying 22. And then we're probably going to dilute. So you're looking at, a 3 or 4 bagger, 3 bagger. So it's not super juicy. Um, yeah, some of these, it just depends what they get. Do they, I think they're going to get at least 150, but they could, I mean, gold prices keep ripping. They could get 200. Malavras, current resource is 2. I think it's going to at least 4, but it could go to 6. So you put it at 6, you're paying $16. So again, not super juicy, but interesting. Okay, so that's your exploration stocks. And now we're going to let's do small producers. I don't have any mid tiers on here. I thought, um, okay, so we have 3 small producers. We got Talisker, who's in British Columbia. Um, they have 2 million ounces. I think it's going to grow to 3. So you're paying $10 an ounce in the ground. And, this one has risk. They just started producing. It's going to take some time for them to ramp up. There's going to be some CapEx spending. So this one it's not super juicy. It definitely has some risk. So that's the reason why I don't have as a top pick. I have as a 2.5. Um, and Silver X is another one that has a lot of risk. They really don't get healthy until about $35 silver. So that one's you're covering a lot. And then Bear Creek, this one is one of those pure exploration, pure optionality play. It's the Karani project down in Peru, which is huge. And if they build it, I think this thing definitely has 10 bagger upside. So Karani at 250, you're paying 28 cents in the ground, but we don't know how much it's about. They need to borrow about 400 million, and that's the reason why they're waiting. The bank's not going to loan them 400 million until silver gets above 35. But I do like Karani. I actually like Talisker and Silver X, but I'm accepting the risk. I know I'm taking big risk on both of those. Those kind of the roll the dice type of things. Those are the ones that you don't want to allocate too much to. Okay, so now let's do silver developers. Okay, whoop, I did gold. I wanted to do silver. Okay, silver developers. Sun Silver. I mentioned some of these in my developers, the developers that I own. Let's see, boom, boom, boom. I don't own Argenta, it's on my list. I don't own Bob. So I've mentioned all of these in my developer, um, except for a couple, Argenta and Bob. So I can go fairly fast on these. Um, Sun Silver, we got 450. This is silver equivalent at 12 cents. If they build this thing and it's worth $3 an ounce, that just on optionality, it looks like a 10 bagger. If they just take their time, build this thing, get it into production. Once it gets into production, it should get revalued to $3 an ounce. That's kind of the way that I'm looking at these developers. It's like they got to get to production to get these returns. So, but if they get to production, then they're going to get revalued higher. So this is really the revaluation point. For exploration companies, it's the sell point. But this would be okay. This is kind of what we were expecting on the reval. So Silver Storm, this is San Diego, but I don't. This one isn't quite as. They'd have to build San Diego, which is about a long ways away, at least 5 years away. So San Diego is a long termer, whereas Sun Silver, Sun Silver's a while too. I think Sun Silver is 4 or 5 years. Both of these are kind of 4 or 5 years to get into production. They're both long termers. We don't even have a PEA yet on either of them. So they're both just silver sitting in the ground. Silver Storm, they're working on, I think it's La Perilla that they're trying to they're going to restart that next year. Then they'll go and do San Diego and they'll put a PEA on San Diego. So San Diego's next. Sun Silver, we don't have a PEA yet. So that's kind of Discovery, Mexico. They've submitted their permit. We're waiting for their permit. Then it's about a 2-year build, but they're just about construction ready. But once that thing um, is built, I think it's going to be worth at least $4 an ounce. I probably could throw a 5 on there, but I'm using 4 because of we don't know how much dilution there's going to be. So Silver Tiger, um, they have a small capex. We're waiting for permits in Mexico. Trading at 44 cents in the ground. Um, Not a bad optionality play. Argenta, I don't own this one. This is the one that just, oh, this is on my buy list. I want to buy this one. This is the El Cavar project they got from Golden Minerals. So you got 85 million ounces. You're paying 40 cents. Um, and so I think it's pretty cheap. You're paying 40 cents for a pretty darn good project. Thing that's kind of amazing is that Golden Minerals gave this away, and I have their valuation, future valuation at 340 million ounce, 340 million just for El Cuvar. It's like, wait a minute. And they paid nothing for El Cuvar, like $10 million. And if you build it, it's going to be worth that much money, which is kind of crazy, isn't it? Why would they just give this thing away? New Pacific, they have 2 projects to build. The problem is I think Silvercorp's going to buy that. I don't think this thing will ever get to production. Plus, it's a long way out. Aftermath, this is mainly, I have it as silver, but it's really a manganese project. Bob is also another base metals. It's mainly a lead project. It's a little bit of silver, low grade silver with a lot of lead. So I've never really been a fan. Unico, 150 million ounces. This one, we're gonna have to keep an eye on it. I do own it. I am bullish. but we have to keep an eye on it because we need to see how they're going to get into production and when. Abra, I have it at $5. Again, they're going to have to build this thing. I think it has more upside. You're paying $1 an ounce in the ground at 250. Maybe they get that to 300. If they get it to 300, you're paying 70 cents. Um, so that's development silver, and now we have development gold. This is the last group. So we've actually been going through this thing pretty fast. It's not taken, I don't think it's going to take a whole hour to get through it. First one on the list is Chesapeake, and Chesapeake has just gotten crazy cheap, $49. I mentioned if you watched my development piece, I mentioned that they had a legal issue on one of their leases, 700 hectares, and we don't know how many ounces are in that section, that lease, how much is going to impact them. But like I said, I think whoever owns those 700 acres are going to sell it to Chesapeake if they win the legal argument. So I think the risk reward right now on Chesapeake looks pretty darn good considering how much gold they have, 18 million ounces of gold. Um, so I'm looking down the ones that I don't own. I don't own Troilus, Galleon, Wallbridge. So I didn't talk about those. Lumina, Saturn, and Canagold. So I own most of them. Okay, so that's Chesapeake. Troilus. The problem I have with Troilus is the capex is just huge, but ironically, they've it looks like they've raised like two-thirds of the capex already, and I don't even think it's permitted yet. It's kind of ironic. I mean, that they have a really good board and really good team, and they had no trouble raising money. But I've always thought I've talked to their management team a few times, and they've said that it's just too big that they expect to sell this thing to a major. Um, so I did own it, but I sold it because I don't think they're going to take this thing to production. Remember, I mentioned that these valuations are kind of on the reval once if they're going to get revalued up to at least these levels. Um, Actually, this would be kind of a minimum if they sold early, I think. I don't see these companies selling below these prices, actually. So, from an optionality standpoint, they're actually pretty darn solid. Um, it's if you have a really good project in a good location, it just doesn't make sense to sell for less than 150. You can do it, but you're just giving them away. Um, I remember Great Bear sold for $250 an ounce in the ground, and because it was in a good location. But the reason why they sold 250 is because it was their maiden resource. They thought it was going to get a lot bigger, and it did. And so I don't know what it netted out, how much they cost after the fact. I think it's up to 10 million ounces. I think I think it was at least half. They expected at least half that. So maybe they paid 130 an ounce in the ground. But so quality projects, um, I think are going to go between 1 and 150. You can see most of these are 150s. I have Chesapeake at 100 because it's in Mexico and it's not permitted yet. So I thought maybe it could get taken out below that. But these ones that are 150 are in Canada. So we got Stellar, that's another really large. Troilus and Stellar are both very large. We're looking at 13 million ounces, 15 million ounces. These are very large projects. And I just don't think they sell for less than 150. So the optionality on these just makes sense. Galleon's small, only 1.5, but you're paying ounce in the ground $7. I forget. where Galleon's project is. Let's take a look. This one's fairly new, or they changed their name. Um, Formerly Pure Nickel. So you're paying $10 million for uh, a million ounces of gold, um, which is in a fairly good location. This is in Canada. You scroll down. Yeah, this is in Timmins. This is in Ontario. So you're basically in Ontario. So Galleon is definitely interesting here. I don't own it, but I say, why is it so low? What is the red flag? Why are they giving this thing away? Highcroft, I mentioned, this is one of those ones, total optionality. It just depends. 15 million ounces of gold. At, at what point does that, is there gold in the ground worth $100? At what point? I think $3,500 gold, it should be worth at least 75 bucks, but we don't know. We just don't know how their gold in the ground is going to get revalued. Because once you get above $3,000 gold, there's going to be a lot of desire for companies to grow because they're going to have a bunch of free cash flow and they're going to be looking for opportunities to grow. And Hycroft's just going to be sitting there with all that gold in the ground. So they're going to be getting some offers. So I think it's a decent optionality play, but it is low grade. Wallbridge has been kind of spinning their wheels. They have 6 million ounces, which is a lot. I'm only valuing them at five, so you're paying $8. So from an optionality standpoint, it does look pretty good, but I did own it, but I don't own it anymore. I was just disappointed with their progress. So since I sold it, it's probably a solid 10 bagger. Spanish Mountain. I like Spanish Mountain. Paying $8. I don't know why I like Mountain more than Wallbridge, but on paper they look very similar. But the thing about Wallbridge is that they just don't seem to have a plan on how they're going to build that thing. Whereas Spanish Mountain, it's an open pit. They pretty much know exactly what they're going to do. They're just waiting for higher gold prices. So I think they're going to build it, and once they build it, I don't think they would sell for less than 150. So it's just telling us this thing's got some serious upgrade, but it depends a lot on how much they dilute. Again, development projects, they are going to dilute us. They don't have any cash flow. They don't have any income. So they're going to dilute us to get to construction ready, and then they're going to dilute us to build it. So we're going to get diluted fairly severely. That's the one bite. Goldterra, I like Goldterra because it's in a good location and it's got a lot of exploration potential, but it kind of reminds me a little bit. It also has really good grade. It reminds me a little bit of Wallbridge where they don't really have a plan. They need to drill. I remember talking to the CEO. He goes, they want to drill this higher grade portion and before they mine it. So there's a lot of unknowns on Goldterra. International Tower Hill looks really solid to me. They're just waiting, they're just permitting. If we just value them at 10 million ounces, it's $10 in the ground. I expect them to build this thing. They have good insiders. So International Tower Hill is a good option. I play Unigold. This one is more high risk. It's in Dominican Republic. They haven't made a lot of progress. Definitely high risk. Revival, I'm a big fan of Revival. Hugh Agro, the CEO, I think he's doing a good job. I think they're going to get this thing built. Paying $10 an ounce in the ground for good locations, good projects, good team. The only downside is we got to wait at least 2 years before Mercer's in production and maybe three. So we got to wait there, but I don't mind waiting. I think Revival is going to be a 200,000 ounce producer, maybe 250, probably 250. Goldshore, and then they might grow from there. Goldshore, the one thing, I mean, if we look over here at these ratings, not too many 4.3s. I actually have Warbridge is a 4.3B, Stellar's a 4.3, International Tower Hill 4.3B plus. That's been the best rating so far. We got another 4.3B plus on Nextgold, which I like a lot. Goldshore 4.25B minus. I'm worried about permits. I'm worried about maybe they get taken out. Worried about how long it takes them to build it. I'm worried about dilution, but I do own it. We'll see how it turns out. But you're paying $10 in the ground, which isn't bad. Um, if, if yeah, if I thought the permitting was a slam dunk and I thought the insiders were a slam dunk, I would be all over it. Paramount Gold Nevada, this one has really gotten cheap. 23 million, you're paying $23 million for a 23 market cap. You're paying less than $8 an ounce in the ground. And you in Grassy Mountain is getting ready to come into production, 50,000 ounces, and you're getting Sleeper for free. So I think Paramount Nevada looks interesting. Next goal is I just totally like this project. I mean, they have 6.5 million ounces. It's going to grow to 7. You're paying about $13 in the ground for 250,000 ounce producer in Canada. It's just ridiculous. One of the reasons why it's so cheap is because historically it hasn't it's the chart hasn't done well. It's like a falling knife, so nobody wants to own it. But I think most shareholders probably lost money holding it, but I think you're kind of buying the bottom here at $13, I think. Maybe it goes to 10, but you buy it to the bottom is my thought. Barton, $15. This is in what, Australia. Not big a fan as I used to be. Um, I thought that they were going to get this open pit. They were going to do an open pit first, kind of and then use that cash flow to develop their flagship. But instead, they've been drilling their flagship and I think kind of taking their time on the open pit. So they need to, Barton needs to get going in a better direction. We'll see how they turn around. Nova, this is, I mean, you're paying, they're showing 8 million. I'm only valuing them at 5 million and you're getting $10 an ounce in the ground. Um, they are making progress. They do have insiders. I'm worried about getting taken off. Um, they have a phase 1 project, 500,000 ounce open pit at 2 grams, which could get them up and, get them going in a good direction. It's not a slam dunk, but I think it's very interesting. Lumina, I and I don't own Lumina, but I feel like I'm making a mistake on Lumina. They have it's 16 million ounces of gold. I'm only valuing them at 10 because that's the kind of phase 1. But I think maybe I'm valuing them too low. But even at 10, it's $16. Uh, 80% of the revenue is gold. It's 350,000 ounces a year, and then 20% revenue for copper, which is their offset, which takes their AISC below 1,000. But it's got a $1 billion capex. So that's going to hit, that's one of the reasons why I only buy them at 10. That's going to hit, our upside a little bit. But Lumina is interesting. Definitely a stock to take a look at. Rocks Resources in Australia, Western Australia, 3 million ounces. You're paying $18. I do not think these guys are going to sell early. So at 150, it's basically a 5 bagger on optionality alone. And then if they build it, it's going to be more than 150. Then they could get re-rated up a lot higher. One thing I haven't mentioned, if these companies get into production, they're going to get these numbers here that we're using for future valuations. It's going to get a lot higher if they get into production. So company like Rocks in production, you're looking at probably $250 an ounce once they get into production. But all the way up until production, I don't think they would sell for less than 150. Sonoro, another good example. I do not think they would sell for less than 150, which is about 150 million. I don't think they would sell for that. They're currently at 18, and I don't think they're for sale for less than 150. Um, I just think management, they want to take this thing to construction. Falco, 5 million ounce project in Canada. You're paying $12. I think they could easily get taken out. I think 5 million is big enough for somebody to get really interested. I think they could get taken out for less than 100. But they're currently at 12, I think maybe 50. So from an optionality standpoint, it's not a bad play. It's definitely interesting, but I'm not super excited about it. Minerals, it's in Australia, open pit project, so you're getting, paying about $20 an ounce for it, but no production until 2028. That's the one turn off for me. That's the reason why I don't own it. Thesis, another big project in Canada, 5 million ounces. So it was benchmark, and they renamed it. This is another one I'm worried about. So Falco and Thesis are very similar stories. 5 million ounce projects in Canada. They got to permit these things. It's going to take a while to build them. Can they hold on to them before they get taken out? We'll see. 1911. I'm only valuing at 1 million. I think we could, if we go 1.5, you're paying $15 an ounce in the ground. And they already have a million. I think this thing could easily go to 1.5, but I'm only valuing them at one. I do not think these guys will sell early. I think, they get this thing to production, and I think you're really looking at, $200 an ounce in the ground. I don't think these guys would sell for less. I think that optionality on 1911 looks like it looks pretty darn good, like an easy three bagger, seems like. Canna Gold, high grade underground mine in Alaska, paying $23. This was one of the higher ones. Um, Problem here is it's too small right now at 1.2. They need to get it bigger. So I'm not super excited about it. So there's your optionality list. So I'm gonna go ahead and bring them all back. There's that, and then we'll bring back gold and silver. And I'm gonna go ahead and I'm gonna sort it alphabetically. Company name. Okay, so there's alphabetical. So now you can take a screenshot of this. It's a video. And then if you're looking for, um, what was that at? That was International Tower Hill. Okay, so is it all going to fit? No, we got to go. Okay, this is screen number two. So you could do a screenshot of that. And if you're looking for a stock and see, did Don cover, and then we'll do the last section. So that's Spanish Mountain. Okay, so they're stellar. So this is the last section. So there were 63 names, and that's everything. So now you let me know if I missed any. Um, I don't think I did. I mean, no, I'm sorry. Let me know if there's any that you think should be on the list. All right, guys. Till next time. I'll see you.